Yo, what's going on, everyone? Welcome back to another video. Today's video is going to be on how to implement the higher time frames. Now, we all know how hard it is to understand the monthly. Like when I was first off getting, understanding or learning smart money concept, I was looking at people using the monthly time frame, and in my head, I'm just like, damn, like that's crazy. Like, how are you using the monthly time frame? Like, are you waiting for this monthly candle to close? Are you selling? Are you buying? Are you dancing? Are you doing, working out? Like, what are you doing? And it's crazy how hard people made it sound, but in reality, it is so simple, and it all goes down to the basics of understanding trend direction. Now, before I do get into this video, I just want to quickly give everyone a quick thank you for getting me to 16k subs. It means a lot to me. I'm going to be posting a lot more videos nowadays because it is a summer, and I will be doing a summer course sale and more giveaways in the future, so stay tuned for that. So let's get straight into this video. So before we do get into what the higher time frames are and how we use it, let's actually understand what they mean. What even is a time frame? Now, we all know that the time frame is just simple. After, for example, the monthly time frame, after every month a new candle is printed, right? But then how do we actually understand how to use that information? What do we do with that information? Well, let's zoom in right here. Let's zoom in just to this bearish candle right here, this really thick bearish candle. Now, this thick bearish candle, it was printed and it was bearish. Does that mean that we're waiting for every single candle to print after 30 days and we take the sell depending on if the candle closed bullish or bearish? No, all this is telling us is that the month itself was overall in a sell side market. The buyers were out of the momentum. They were no longer pushing price up. So it's really logical. You just got to think in terms of logicalness, right? So if this month was extremely bearish, what is this month going to tell you? Well, that month's going to tell you that it's most likely going to follow up with that, previous bearishness, and it's going to continue with even more bearish momentum. But how do we know that for sure? Well, once again, it all comes back into terms of trend and where the market is overall heading. Now, on the higher time frames, when we do see something like, imagine this is the monthly time frame, right? We're seeing that the market is trending down on the monthly time frame. But then sometimes what we won't really look at is that when the market is overall moving bullish like this, imagine this is all one monthly push up towards the upside. We will totally forget that the market is just going up to retrace into a higher time frame POI. Because remember, there's cause and effect. There's objectives for everything. Over here, when the market was pushing up, why is it pushing up? Well, once again, it's pushing up to test another institutional candle so it can continue going bearish. Because remember, inside of this impulsive move down, there's tons and tons of, order blocks, institutional candles. Shout out to ICT. So, there might be an institutional candle here. There might be one over here. There might even be one over here. It's all about understanding where the ICs are and which one is more high probable and which one isn't. Now, we know that the one that's at the 50%, aka the equilibrium, that's not the best one we want to take. If I measure it from the, the high up to the low, and I mark up the 50%, which should be right here, if I'm not mistaken. Let me just quickly check this out. Okay, no, the 50% is right here. My bad. My bad, guys. I'm not a fraud. My bad. So this is 50%. Now, we know that the 50% is the equilibrium. What does that mean? Well, that means that this is where buyers and sellers are both, they both have the same amount of pressure. There's no buyers. There's no sellers. It's just an equal price. It's even. Everything is fair. Now, we can't be buying at equilibrium, right? That's like, it's fair. There's sellers, there's the same amount of buyers. And at that point, that's where consolidation happens, right? So anything above the 50% is considered to be discounted. In this case, because it's sell side, it's considered to be premium. And if it was a buy side thing, for example, if I do go to inverted chart, inverted scale, this would be premium or discounted, right? So buy side is discounted and sell side is premium. So when we do see all this monthly bullish candles, right? Imagine there's like multiple bullish candles. We also have to keep in mind of what the monthly is saying. Where is the monthly institutional candles? Because imagine this: if you're on the 4-hour time frame, an overall trend is moving towards the upside, and price is just over here. Are you seriously going to say, all right, I'll buy because price is this high? Well, obviously not, because most likely towards the left, there's going to be an institutional candle price is going to tap into so it can continue going down into that retracement and then go up once again. So it's all about understanding where the candles are, where is price action, what is the market overall doing? And this is where how, we implement the monthly chart inside of our trading. So overall on AUD USD, we can see the monthly in itself is extremely bearish, right? We did have this little buy side higher high, higher low trend forming, but then the market ended up breaking past this previous higher low right over here. So we can see that there's a clean break of structure. We can see that the market is overall now moving in a bearish direction. Right over here, if we look at the overall trend, keeping it simple, any retail trader could understand this. A baby could understand this, right? We have a low, we have a high, and we have a low, and we have a lower high, and then we have a lower low. So the trend is telling you that the overall trend is moving towards the downside. That's what that's what the trend is telling you. Now, as we did see that as AUD did stop with its bearish momentum right over here, and this is where we started retracing once again. Let's look if there was a cause to this. Right over here, we can see that there's a clean institutional candle right over here. Now, obviously, if you go down to the the second monthly time frame chart, maybe it's a little cleaner. Right here, we will see a clean institutional candle that the monthly time frame tapped into, and surprisingly, like I said, this was in discounted price values. You can see that it was below the 50%. As you can see right over here, as soon as price came towards the 50%, it broke past it right away. It broke past it, tapped into, or not even tapped into, came inside of our blue zone, which was the first institutional candle was right here. Use that institutional candle to later continue that even further bullish momentum push towards the upside. Now, if we measure this move right here with the fib from the low up to the high, we can see there's another institutional candle inside the blue zone. Price taps in and moves a decent amount, like over 1,000 pips, just off of understanding discounted zones. So, but overall, if we're looking at the higher time frame, just at the monthly time frame, and we're understanding what the current market situation is like, we know that the market is moving bearish. Now, right here, we can see that price did tap into some type of candle, which caused all of this distribution to happen. We can see that inside of the zone, if I do highlight this and I mark this up as a distribution, because this is where price consolidated and started pushing down, it didn't just randomly decide to, okay, this is a white chart, or I'm just going to consolidate here and go down. No, there's cause and effect. If we look towards the left, we can see that the cause of all of this was this institutional candle right over here. Mark this up real quick, turn that to yellow. We see that last bullish candle before that major bearish move towards the downside. And if I extend this, we can see price tapped into that IC. It tapped into that IC, rejected, showed you probably a decent schematic on the smaller time frame, such as the 1 hour, 2 hour, 4 hour, and then it starts making its overall move towards the downside. But now it comes to the question, how am I actually going to understand where the monthly time frame is going? Where is the candle going to be going now next? Where is price action heading to? Well, it's really simple. We know that price reacted off of this institutional candle, and now it's going down somewhere. There's an objective, right? It's not like the market is just selling off to sell off. There's an objective for it to sell off. It's selling off for a reason. Well, if we look a little bit lower, we can see that there is a clean institutional candle right over here. We see that last bearish down candle before that move up. So it's clearly an objective for price to come back down to mitigate those sells that the banks added. Mitigate those buys and then continue either going bearish or bullish depending on what the market wants to do. But overall, we know that price needs to come back down up to this point right here, and that's all the information we acquired just off of the monthly time frame, which is amazing, right? So now we know that price needs to come down over here long term. So that could mean that price could come into here and then continue bullish, or price could easily just go back down to mitigating this institutional candle. We don't know, but we know that overall we're in a bearish structure just off of this information. So now let's go down to the weekly time frame and let's get an even more in-depth look. Now, weekly time frame, we can refine that institutional candle just up to here. And one thing that I can understand is that we have a ton of imbalance, right? Now, I already made a video on imbalance, how to mark it up, all that, but we have imbalance over here. Now, this increases the probability, obviously. Not only that, but we can also see that this major, this little move up that we saw, this little choppiness, bullish momentum, every single person was buying. There's long-term investors that were holding buys over here. Now, every single retailer that did buy and they did decide to hold, obviously the market is going to have to come back down and take out all that money. Because imagine this. 1, 2, 3, 4, 5, 6, 7, 8 consecutive months worth of bullishness. That's a crazy bull market for AUD USD to be in, right? So if that's a crazy, insane bull market, don't you think that there's going to be new traders who are just trying to catch that big move? And that's exactly what happened. A ton of traders decided to buy this, crazy move up, not understanding that this is a sign that market is coming back down to tap into this IC and then, either go up or go down, depending on, what market wants to do. But now we know what price is doing. So just from the weekly time frame, let's understand why price is going down now. We created these equal lows just over here. It's not the cleanest, but we definitely created equal lows. We had a touch of support right here, another touch of support, and another third touch of support. Now, this is obviously a retail trap. This is where the market is creating a range, right? And these are the best times for us to be getting inside of the market. So when the market goes up, it's continuing bullish, and then boom, price creates this range, equal lows, equal highs. And then we see this happen. Now, what's interesting about this equal lows, equal highs is that this is liquidity. This is the cleanest type of retail liquidity that we're trying to trade against. We're not trying to buy over here, sell over here. We're looking to catch this big move after all these retailers do get stopped out. Because remember, there is a ton of liquidity resting above and below these levels, and the market is attracted towards liquidity. Why do you think that the market decided to push up one time over here and then went back down? And then over here, we created a little bit of more liquidity here, and the market wicked up and then went back down. Well, it's not because, the banks decided to, because it's rainy, I'm going to buy, and it's, since it's sunny, I'm going to sell. That's not why. Trust me. I used to think dumb stuff like that. It's not why. I promise you it's not why. It's because there's objectives. They have reasons for why they want to bring price lower. And we have a reason. The reason is because there's an IC candle here. There's imbalance over here. There's long-term investors holding buys on AUD USD from here. So we need to come back down to mitigate and stop out all those long-term buyers. Now, if you did buy from here, at this point, I'd hope you sold. If you didn't sell, if you didn't take your profit, may God be with you. But anyways, after price did tap into this IC candle, we saw a clean schematic to take the sell. Clean schematic. Let me actually remove this, and let's remove this. And let's stick to what the market is telling us. Let's look at a line chart to even make this easier. Just look at this. Look at this line chart, and I'm going to try to mimic this. So the market was going pretty bullish. Create that last higher high, and then we go down. Right over here, we go down, we break past this previous higher low. As soon as we broke past that previous higher low, what did the market do? It consolidated and slowly made its way back up to that original area that broke structure. And what did it do? Well, it mimicked the same thing, and now it's going down. It's simple as that. It's simple as 1, 2, 3. Forex is not hard. You just need to be disciplined and understand this. So let's go to the candlestick once again. So boom, we see price taps into the IC, and it automatically starts going down. Now we broke structure right over here significantly. Basically indicates that the move down is going to happen. We're going to see extremely bearish market on AUD USD. But how do we catch this trade? Well, you have to look in terms of the 4-hour time frame. Now the daily, the weekly, you have to use all these different time frames to actually understand what you want to do. Now the higher time frame is superior. We know that market's most likely going to make its way back down to here. So at that point, we know that we're bearish. We don't have to be looking at buy side order blocks. All we're looking for is sells. That's basically it. So let's go down to the daily time frame now, and let's try to understand what's happening inside of the zone. Let's understand this. Before this major move happened, we saw a ton of manipulation. We saw the market create some equal highs over here. And as soon as the market created these equal highs, that means there's liquidity resting above. Price went above that to stop out all those retail sellers, because remember, people are selling at resistance, buying at support. There's retail sell stops resting above. There's buy stops and retail, liquidity resting above. And below that, you guessed correctly, more liquidity. It's like a movie at this point. It's fun to watch. You're just seeing the market go up, take them out, go down, and then we're getting in, which is the best part. So right here, the price goes above to take out all those sellers, and then market, does choppy a bit, but then boom, it ends up selling off. This is that major move down that we're looking for. That's the major move down that we're expecting. Liquidity got grabbed. That's it. We know what we want to do. At this point, we're on the daily time frame, and we're just focusing on that major move. So just focusing on that major move, I can see that there's a clean institutional candle right here. Mark that up in blue, make that a little nicer. We have a clean institutional candle right there on the daily time frame that has yet to be mitigated. It hasn't been mitigated. It's clean. Market still has to come back up to take out those orders. Now, if we go back to I think the 12-hour was, we can find another IC, and you can refine this up to here. You can refine it depending on how you trade. Now we see another clean institutional candle right over here. These are both indications that one, overall, AUD USD is bearish now, but it needs to come back up. It's not like it's just going to sell off. It could do that, but most likely AUD USD is not just going to do that, because if we just completely sell off, what's going to happen? Everyone's going to stack up on sells. Retailers, me, you, your dad, your mom, your grandma, we're all stacking up on sells. That's just the truth. Your friend will as well. Everyone will. But that's why price does stuff like this. That's why the market consolidates and then goes up and then goes down. That's why the market acts like this, right? Now, we're looking to, sell over here. We don't even need to give you reasons. At this point, you should know why. We're looking to sell right over here. Now, a long-term target would obviously be for AU. My bad. Let me just quickly do this. Stop loss at the high, depending on how you want to trade. And then boom, TP at the next low. So this is a pretty clean 20 to 1. Now, I'm not here. I'm not a bullshit guy. I'm going to keep it real with you guys. Ask any one of my students. I keep everything so real. I show my losses. I've back tested live. I've showed them how many losses I've taken. I don't care. It's a part of the game. This is not me telling you that, okay, I catch 20 to 1s every single day. No. This is just me showing you that it is possible, but it's not sustainable. You can't be catching 20 to 1s, 50 to 1s. Sometimes you have to largen your stop loss because you will get stopped out. You're going to get stopped out a lot. So that's why I say either wait for confirmation, and if you don't want to wait for confirmation and set a limit, be my guest, but make sure you use a bigger stop loss because it's extremely important. Now, I don't want to get in deep to that. We'll get into a different video for risk management, but in this case, this stop loss would be 30 pips. And TP is just going to be the next low. So this is what we're originally waiting for. And this is a free setup. You're welcome. Not a signal, by the way. I'm not saying anyone take this as a signal. This is just a setup. If you decide to take it, take it. I'm not your financial advisor. But I just want everyone to understand that I didn't even go down to the 1 hour time frame. I didn't go down to the 15. I didn't go down to the 5. I didn't go down to any single time frame at all. I stuck to the higher time frames, and remember, the higher time frame is always superior than the lower time frames. I don't know why people have the mindset that the lower time frame is bullish but the higher time frame is bearish, so I'll take buys. If the higher time frame is bearish, wait for the lower time frame to be bearish and then take your sells. Do not take the buys. So we know price is coming back down here. Now at this point, when price does come back down here, we can possibly take the sell, or we can possibly, catch that swing buy back up to, there's probably liquidity left over here that price needs to come back and take out. Or maybe AUD USD is overall just going to move in a bullish market, right? So we can catch the sell and the buy all by just understanding the monthly and the weekly time frame and even the daily. I haven't even gone down to the 4 hour. I'm just on the 12 hour right now, which is the crazy part. So we know where we're selling at. But before we do get in, I end this video, let me just show you guys why this move is significant. One thing that I want everyone to understand and move their attention to is this area right over here. I completely drew that wrong. My bad. Give me a quick sec. Boom. This area right here. We have a touch of resistance, right? We had an institutional candle. Price created, went down. Price tapped into it and then sold off. Smart money traders got in. Boom. But after price came back to this level, smart money traders knew that, all right, this area got mitigated once. It already got tested. There's no reason for me to take a buy anymore. For me to take a sell at this level. Instead, I should wait for price to take out the stops, and then I could possibly stack up on sell opportunities. And look what happens. Price pushes up to stop out all those liquidities, take out all those, liquidity that rested above over here. And where did it land to? Well, let's go down to the, the second daily time frame. Surprise, surprise. Goes into this institutional candle right here, taps into perfectly that, clean last bullish candle before that move down, taps into it, and then does what? Sells off, right? And this is after the retailers are getting out. And mind you, this is just on the daily time frame. I'm understanding all this from. So everything's there. You don't need to be on the 15-minute, 5-minute, because think about it. If I know where price is going long term, what is the 1 minute time frame going to do for me unless I'm scalping, right? Like, it's not going to do much for me. Oh, look, it looks bullish, right? Think about this. When you're on the 1 minute, you're like, damn, it's bullish track. Why aren't you looking for buys? You're a scammer. Why aren't you looking for buys? Well, buddy, go back to the monthly and look at what the monthly is saying. Monthly is extremely bearish. Stick to that. That concludes my video. Thank you guys so much for watching. If you guys have any questions, let me know. If you guys do want to enroll in the course, the link is in the bio. We are doing insane in the mentorship right now. Sorry, the course, not the mentorship. But it's kind of like a mentorship because I answer all the questions, and I'm here 24/7 to support everyone. But yeah, so we are doing pretty good. A lot of students did pass the prop from challenge. They got funded. If you guys have any questions, message me on Instagram. My Instagram is in the comments below, description below. Let me know on Instagram if you guys have any questions regarding the course, regarding Forex, regarding life, general, anything, let me know. Thank you guys for watching. Make sure you leave a like and subscribe, and have a good one. Peace out.